another historic day on Wall Street with the Nasdaq closing above 4,000 for the first time in 13 years. Welcome to the Closing Bell. I'm Kelly Evans, and here's how we're finishing the day on Wall Street. Take a look across the major indexes, only adding a couple of points, and the Dow just barely a point on the S&P 500. Those arrows should be light green, basically. The Nasdaq is up about 23 points, so it's the outperformer today. It was lagging yesterday, but again, a lot of people just focus on that 4,000 level psychologically, if for no other reason. So that's how we appear to be finishing up. Now, want to move on and bring in our Closing Bell panel. Joining me today, our very own Kayla Tausche, Dominic Chu's here, Mike Santoli from Yahoo Finance, Andrew Stoltmann from Stoltmann Law Offices. Welcome back. New Jersey rolled the dice this morning, becoming the third state to legalize online gambling. The Garden State, which is home to the gambling coastal town of Atlantic City, is betting the move will spur revenue and help the state keep taxes in check. We were actually talking earlier about some of the valuations that we're seeing for companies that are involved in this space. I mean, there's a lot priced in.
There's a lot priced in. And remember, when we talk about this for our market here, a lot of these companies that are partnering with these casinos are companies that are based outside the U.S. in places like Gibraltar, the Isle of Man, the U.K. There are a couple, though, names in the U.S. that have been seeing some decent stock moves. We're talking names like IGT, which makes slot machines and electronic gaming companies. Also, Zynga, which is a pioneer in social gaming. They might have a way of getting in as well. So competition, Kelly, is a key component of this. The question is, how stiff will it get and how much will it really impact everyone's bottom line?
Andrew Stoltmann, what's your take?
It's a horrible, horrible idea. You know, remember, just a couple years ago, you had the Department of Justice shutting down the online gaming sites that were headquartered in the Caribbean, saying this is illegal, it shouldn't be done. Now, because the state of New Jersey has its greedy hand in the pot, now it's okay, and other states are going to follow suit. These companies are preying on probably the most susceptible people in the country, older people who don't have a lot of money, and now you're putting a casino right in their house. It's a horrible idea that's going to raise a lot of money.
About that? Because a lot of people are saying the same thing.
I think the controls, the security, the whole issues surrounding online gaming are a lot tighter in the online world than they probably are in the offline world.
What are some of the
controls? Are a joke.
Hey, hang on 1 second. What are some of the controls?
Well, the controls, first of all, to actually register to the site, you need to actually disclose a lot about your individual personal details. Those are checked against databases, and you have to be a bona fide player before you're allowed to play on the site.
What does bona fide mean?
Bona fide means that we've checked your address, your national insurance number, etc. So we've actually done all of those checks. And actually, in a casino, there are no checks undertaken. You walk into a door of a casino, and you could be anybody.
But one of the controls that's out of your control at this point is that not all of the payment companies are on board with this. PayPal, American Express, just a few of the companies that have not allowed their users to actually be using those funds for the gambling. You have some of the states slowly but surely starting to get on board. What are some of the discussions with some of these payment companies like to actually get that money to be distributed to you guys?
It's a very difficult issue, and it's an issue which is stopping good quality players, people who want to enjoy the experience of playing online, actually having that experience. We do a lot of online transfers, and therefore that is eradicating some of the delays in terms of the credit card companies. You're quite right. We are seeing anything up to a 50% reduction. 50%.
Will you take Bitcoin by any chance?
No, not at all.
Andrew, what about that? You've heard some details, some of these controls that are in place here.
Yeah, these controls are a joke. There's absolutely no meaningful controls are in place. And what we know is that people who live within 10 miles of a casino are twice as likely to be addicted gamblers. Now you put that casino in their house, and you can only imagine the carnage that this is going to bring. These controls that are referenced, they're not going to do anything to prevent the addicted gambler from being preyed upon and losing more money.
You know, guys, one other thing I want to bring up here. This is going to be very much a debate that rages between the online cyber world and the bricks and mortar world. You've got Sheldon Adelson, the guy in charge of the Las Vegas Sands, who says that online gambling could be a cancer on society. Maybe he has an axe to grind, but it's still an important topic to discuss.
Brian?
I don't totally disagree. The amount of technology that is employed and programs which are written to actually watch every customer and every act that they make. We have a system, a thing called the observer system, that has algorithms built in, and if people are changing their normal habits, we immediately contact them. We immediately review with them, and actually at certain stages we'll actually close their site down.
I wonder if any of this new technology will be a help, or at least get in the way or protect people, we should say, from themselves. Andrew, you've made the important point. Over to you. I mean, we're talking about, again, the stories that are warning you about trouble, whether it's our cash-in, whether it's this piece on the 60-40 rule. I mean, doesn't that, Mike, mean we're still climbing the wall of worry?
Yeah, there's no doubt about it. I mean, basically, you have the questions being asked now is, should I buy stocks? It's not, gee, look how great I did in buying stocks. And I do think that that's, you know, one of these net positives. Again, you never know what the end point is. You never know exactly how excited people are ultimately going to get before the market does get way overvalued.
Yeah.
But I think we have some room before it becomes a big concern.
I mean, well, it feels
Alan,
like, it feels like 1999. It feels like, you know, September of 2007, when you have investors questioning whether, gee, should I still be asset allocated? Should I still have so much money in bonds? I mean, isn't that the ultimate sign that we are reaching near that market high? I mean, when you have retail investors questioning the 60-40 rule, that's really, really scary.
Coming off of one of the longest winning streaks, in fact, for these indexes that we've had in almost a decade. Mr. Seymour, that's why I'm curious. I mean, you know, there was some sense of a melt-up into year-end. Is that evaporating now?
I don't think so at all. And in fact, if you look at what was going on today, you saw, I think, significant rotation into big cap, mega cap tech by institutions, long short funds who cannot be long enough into year-end. So looking at the moves in Apple and Google and some of the mega cap names, I think that that's significant. And to the point that we're talking about, if you look at margin debt amongst hedge funds, I hear from my prime brokers all the time, but I'm getting latest numbers. We're at record levels on margin debt. We're seeing funds that actually are as long as they've been. We've talked on Fast Money about the bull-bear kind of indicators, and where we're at record low territories on the bearishness. So,
well, I mean, and if you look, Tim, because we're showing next to you a chart intraday of the market, and you see kind of this general ladder higher, and then all of a sudden it just falls off at the very end there. Is that the rebalancing effect? Do you have any idea what happened there?
I don't think that that's rebalancing, and I think, as Mike said, I mean, guys are going to be doing that now. I think today more than they're going to be doing it on Friday. No, I think, you know, this is probably some programs. If anything, I was seeing very good allocations by people that we were talking to into some of the big cap stuff.
And it's going to be a slow week. There are a lot of people for whom today is their last day in the market. Maybe they wanted to take some profits before the holiday weekend. But I think that the data really show that there's not all that much to fear between now and the end of the year. A fiscal cliff or whatever sort of government crisis we will have won't come until January. Home builder permits today were at a 5-year high. And, you know, we'll get housing starts, too, in a couple weeks. So it just doesn't really feel like, barring one giant piece of negative
Stoltmann,
data.
You're shaking your head.
Yeah. I mean, how can this market not make everybody extremely nervous? We've had such a big run-up. You know, there's some fundamentals that are looking good, but in the same sense, you know, there's no place to go but down from here. We might see a little additional rally, but I want to know where all these bulls were back when the S&P was down 166%. They've all come out of the woodwork, and now I'm getting really nervous.
Well, you know, it's interesting.
Dom, go ahead.
But here's the thing, though. When we talk about this, and Andrew has got a point here, because it is about managing risk. It's not like we saw some wholesale sell-off, really. It's not panic selling at all. It's just people saying, you know what, some nice gains, like Kayla said, maybe take some of those profits, bank them for now. Doesn't mean you won't come back to the market after.
Welcome back. Take-Two Interactive, sliding after the video game publisher said it would buy back all of activist investor Carl Icahn shares for more than $200 million. 3 Icahn-nominated directors, as he promised, have resigned. Kayla, this is interesting because almost by definition, the typical investor can't get the same deal because the activist tends to move the shares just by virtue of the story and their involvement.
Right, and also if every investor could get the same deal for that brief moment in time, they probably would want it, and not every company wants to go private at that very moment. Now, I think when you look at the companies that Herb mentioned, it's not like they're pumping and dumping. I mean, Keith Meister of Corvex was in ADT, for instance. This is another company where this happened recently. ADT bought back over $400 million in stock from Corvex, but he was in the parent company, Tyco. He broke up the company. He's been on the board for several years, and you could argue that he's created enough value at this point and would destroy more value if he just sold it in the open market, because the optics of an investor like that just dumping their shares is more detrimental.
The optics of it are absolutely horrible. You wonder why the retail investor has virtually no confidence in investing in America, and this is a primary reason. I mean, by definition, the board members do have inside information. They're getting a special deal, and at a minimum, the optics are awful. It eviscerates the trust that small investors have in the market, and I just think it's a big, big problem.
All right, hang on, Mike Santoli.
Dan Loeb had private information, and he sold his shares back to Yahoo because they could afford it. They made a market, and it would be detrimental to the stock if he dumped it in the open market.
But then what you need to do...
23% since then.
Well, then why don't they do something
today, though, on that company? It's down 5%. I mean, there's a reason why the stock reacts that way. In large part, is because the public perceives it as a negative, that there's some information that this board member has that makes it want to get out. And I just think it's unfair to the current investors who own it.
Well,
the inside information they have is, if you don't do what I say, I'm going to sell my stock. They create their own inside information. Therefore, it's not really inside once you know that they were going to be cashed out of their stock. As long as the sale price is somewhere in the vicinity of the market price, it doesn't always go down from there. If you go out a couple of weeks, it's not as if it's the top in all of these stocks. I think it's a practical concern. If you have an investor that's going to be dumping stocks sloppily out there, does that do the retail investor any good?
Well,
rather than take it off the market in a hurry?
No, guys, remember, this is also about long versus short term, right? Remember, when Carl Icahn took his stake in Apple, pushing for a share buyback, he made it very clear that, yes, Apple put the share buyback in place, but I'm not going to tender my shares into the share buyback because I'm in it for the long term. So it is very much about a long-term, short-term view and whether you want to be involved in the stock as a long-term shareholder.
First of all, hey, Dominic, what is long-term? Because in the case of Take-Two, Icahn was in there for a number of years, but in the case of Corvex, it was really closer to a year. In the case of Yahoo, it was what, less than a year?
Because ADTs only existed for a year. They were in the predecessor company, Herb.
Here's the key. Here's the key, though. Why don't they do something? And this is something I raised the issue in the story I wrote. Why don't they do a Dutch auction? Let everybody get access to the same deal. They're all not going to get all their shares off, but at least it's fair, and it seems fair. Remember, a lot of people follow these guys in.
Herb, for viewers out there, what do you mean by Dutch auction?
Where they basically they do an auction for a certain number of shares. They do an offer for a certain number of shares. They'll buy them back. They'll buy them back, but everybody will not get it.
But the stock trades down anyway because shareholders anticipate that they will eventually be diluted.
Andrew Stoltmann, go ahead.
Well, but that's the only fair thing you can do, because what happens if the stock price now drops 25% in the next 6 months? Everybody who's currently in the stock will say, well, wait a minute, what do these board members know that the rest of the public and the rest of the people didn't know? And really, the Dutch auction is about the Dutch tender is about the only fair way that you can make certain that everybody gets to take advantage of the same information.
Herb, yeah, but when the company buys it back, that means that it was relatively amicable. So in JCPenney, for instance, when Bill Ackman stepped off the board, he had inside information and he couldn't actually sell his shares for a period of time. The company didn't want to buy them back from him, and then he turned around just weeks later and dumped it all.
In an underwritten deal, though,
that was
right?
all. That's true.
That's true.
But that was also very detrimental.
Why are they doing these deals?
Final word.
Let me tell you something. Well, I think this is going to hit a point, and it really risks hitting a point where the activist investors, who are viewed by many investors as heroes, and they have been, and again, I'm a big fan, turn around and perhaps not be viewed in here as the same way because of these special deals. You watch. They're begging for new rules to be written, and I suspect something will come out of this.
All right,
Amen.
look, it's an important discussion. Herb, thanks very much, guys. Really appreciate your input on this one as well.